Okay, it's Friday, December 16th. This is a pre-opening SPY report, about an hour and a half to go before trading. Just kind of observing that after the big red day yesterday, the pre-market range so far is another pretty big gap down here. You can look at the 1-minute chart. So far, we were down pretty heavily overnight. We're starting to kind of move up a little bit now. We'll see where this range ends up before the open. But it looks like either way, it's going to be some kind of a gap down. What's tricky about this is you do have some short-term exhaustion risk to the downside, and that means you could start the day with a green bar above whatever pre-market high this is, moving up, but you're still going to be below the likely below the midpoint of the prior day, so that's still a downward bias. Let's say we do end up near the top of whatever range forms here. The way I like to play kind of a green to red move is when you come up and fail at these whatever pre-market high is going to be, and then start lower. That would project down to the lows of this range. If we get a big green opening that starts up, even though I'd want to play the failure to the downside, I'd be a little more patient to see kind of hey, let's say we move up for a couple of bars here in the 15-minute chart. I'm not going to immediately go short. It would be more, I want to see something where we really fail and take out whatever intraday low that is the first bar. So, and that would mean maybe we're heading down there, but it's going to be tricky to get, continued momentum to the downside, possibly. But on the other hand, on the monthly chart now, if we gap down here, we're clearly below the midpoint of the prior month, projecting down to the low of that month by the end of December. It's a 2-up failure month developing now. On the weekly chart, this yellow line is kind of the next target to the downside. So that's if we come down with a big shooter bar here this week, this is the next target here. So you got kind of these two targets in play, and you really want to be biased to the downside. Also, yes, anytime you see a 3-bar here on the weekly chart, meaning an outside bar, it is the potential for just broadening action that can reverse the other way. But in this case, you got to think, while we kind of broadened to the upside and then failed and came down, and that was on this bar right here where we gapped up and immediately came down. If you were going to broaden to the downside and immediately come up, you would normally just take out your target here and then reverse. And it looks like we're following through a little bit more versus this move here that broadened up and just took out the target in reverse. So since we're broadening out to the downside, even if we kind of pause today and get a little bit of up action or not really any momentum to the downside, I still see this as kind of a 3-bar that should look for a 2 continuation before it decides to broaden back up. If it, in fact, it's going to broaden up. Sometimes you get a 3-2 continuation that goes all the way to the next target, and that's sort of what I'm still expecting. So therefore, what I'm trying to say is, I don't really, I want to get short. I mean, I want to be biased to the downside, but we're just going to have to see how price opens and be a little nimble with it, possibly just knowing that, you can see here people are trying to buy. Are you going to get really momentum below the pre-market lows, assuming, let's say, we continue for the next hour and a half and are more near the top of the range? But, given that yesterday was really the clear day to trade, today's a little bit of short-term exhaustion risk. Maybe we're going to pause, but also, I think people are going to know we're going to end the week with a pretty big shooter bar that can continue lower into next week, and that might just allow us to comfortably look for short opportunities again today. Even, sometimes you can get 3, 4, 5, 6 bars in a row down. So still going to definitely play the short side. I'm just going to have to see how it develops. Like I said, if we come up green big to start the session, I'm not going to immediately jump into the short side, but I'd like to see the intraday low eventually taken out. As long as we kind of don't follow through here on any opening bars, I'll play the short side again, and maybe it'll be a perfect opportunity to get short and head at least down to these lows down here, or maybe by the end of at 8:30 we'll be somewhere in the middle of the range and start immediately lower to at least take out that as a first target, and then see how much momentum can build to our next target at the yellow line. So a little tricky, I think, on Friday after 3 days in a row essentially down and gapping lower. If you zoom out the 15-minute chart, anytime you have like big moves down, you can have a little bit of pause before you continue lower. I mean, ideally, now that you broke through, let's say, the low of that trading range we've been discussing, you can come back up there. A lot of times, you come back up and the classic, support becomes resistance kind of play. So you move up a little bit and then head lower. But if you move up enough early in the morning, there might not be enough time to really roll over by the afternoon. Although, again, I don't think people are going to want to go home this weekend long. So, still, let's definitely play to the short side in some form. Maybe we'll have to go stock by stock and pick some good patterns. And we'll just see where this pre-market range opens up with a bias definitely to the downside. And maybe we'll just see, maybe this is setting up for a really nice opportunity to go short, given we're rallying a little bit, and these lows will be taken out at some point. So you got to try that. And, always use the first bar. If we have some kind of red bar to start or some kind of green and immediate red, then, you have a small risk with just the midpoint of whatever the first bar is as your stop, and hopefully you get immediate continuation. So, it's not like your risk is going to be that big if you decide to take a short trade that might develop early. But we're just going to have to see today. Is it going to be more of a consolidation day after a big gap down, or is it going to really build some more momentum today as well? I think, either way, next week there should be some good short opportunities in some form that'll be a little bit more classic in terms of the actual signal. So today is just, 4 days in a row to the downside. Sometimes that's a little bit of exhaustion risk, and we're just going to have to see how it plays out. But the bias is certainly to the downside.